Hey everyone, it's Thursday morning, January 29th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital, Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. Now yesterday, U.S. stocks were basically treading water after the Federal Reserve wrapped up its first meeting of the year and decided to keep interest rates unchanged. No big surprise there. Still, investors were watching closely, especially with big tech earnings coming in. At one point, the Standard & Poor's 500 even jumped briefly above the 7,000 mark for the first time ever before slipping back a little. The Nasdaq Composite edged up around 0.2%, while the Dow Jones was more or less flat. So, what did the Fed do? Well, policymakers kept rates in a range between 3.5% and 3.75% in a 10-2 vote. Two officials wanted a cut of 25 basis points, but the majority decided to stay put. Now, all eyes are turning to Chair Jerome Powell's comments because investors are hunting for clues about future rate cuts. According to experts, markets are still expecting about 2 quarter-point cuts by the end of 2026. Meanwhile, the US dollar had been under pressure recently, hitting its lowest level since 2022 earlier this week. Yesterday, it bounced back a bit, helped by political headlines and renewed uncertainty around trade and tariffs. And speaking of politics, the central bank is still dealing with pressure from Washington. There's ongoing tension around Powell, investigations, and talk about who might replace him next. So yeah, plenty of background noise for markets right now. Over in tech, things were heating up again. Strong demand for chip-making machines boosted optimism around artificial intelligence. That lifted sentiment around companies like Nvidia and Taiwan Semiconductor, even though some suppliers gave back early gains. And then, after the closing bell, the big earnings reports rolled in. Microsoft delivered strong numbers. Revenue jumped 17% to about $81.3 billion. Operating profit rose 21%, and net income surged 60%. Cloud revenue hit $51.5 billion, and Azure grew 39%. Still, the stock slipped about 4.4% in after-hours trading. Tesla, on the other hand, disappointed on revenue. Sales came in at $24.9 billion, down 3%. Earnings per share dropped 61% to around $0.24. Net income also fell sharply. The company talked about heavy investment in clean energy and robotics, and its shares rose about 2.48% after hours. Meta also posted solid results. Revenue climbed 24% to nearly $59.9 billion. Earnings per share rose 11% to $8.88. For the full year, revenue reached about $200.9 billion. Management sounded confident about artificial intelligence and future growth. So, overall, yesterday was all about the Fed standing still, political uncertainty, and a very mixed bag of tech earnings. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.